Friday, August 2nd, 2019, Maneco 64, home of alternative economics and contrarian views. This morning I'll start with a quote from George Washington, the founding father in my opinion. And this is what he said, and it's about political parties and the divide and rule or divide and conquer strategy of the powers that be. He said, however, political parties may now and then answer popular ends. They are likely in the course of time and things to become potent engines by which cunning, ambitious, and unprincipled men, you can add women to that as well now, will be enabled to subvert the power of the people and to usurp for themselves the reins of government, destroying afterwards the very engines which have lifted them to unjust dominion. George Washington. So that's my philosophy. That's why I don't cover politics too much. I think it's a distraction for the general public. And that's why I focus on the money. Money is very important. If you understand money and how it's been corrupted in the last 100 years and how they use that to subvert your freedoms, to enslave you, in my opinion, you have a better chance of being independent. And that's why I've started also a campaign in my Teespring store. It's a divide and rule free zone t-shirt at maneco 64. Have a look if you're interested. Every little helps the channel. Anyway, very interesting day yesterday. Prior to that, of course, on Wednesday, the reaction to the Federal Reserve rate cut wasn't great by the stock market. The Dow dropped over 300 points. It didn't seem that Chairman Powell indicated that there were going to be a series of cuts, that it was just like an insurance cut. So the markets actually dropped after the close on Wednesday. But then yesterday, when we reopened, the markets rallied almost erased all the losses from Wednesday, and then all of a sudden we get a tweet from President Trump saying that he's going to impose a 10% tariff on the rest of the 300 billion of Chinese goods on which he hadn't imposed tariffs so far, and that would be from September 1st, of course. And the markets just like turned around very sharply, and we're down almost another 300 points on the day. The Dow, gold and silver had a very volatile day. My video from yesterday was, of course, that it was going to be a very long 50 days until the next FOMC. I didn't expect, and I said I expected volatility, but I didn't expect what we got yesterday. It was quite mad, crazy. So yeah, gold dropped to 1400 after being up to 1430 on Wednesday. And then we rallied all the way up late yesterday after the close when Project A or Globex reopened yesterday. It was after 6 p.m. New York. Gold even rallied to 1449. So it was a huge volatile day. Silver traded below 16 to around 1590, then rallied back up, but didn't rally as much as gold. So very interesting. I tweeted out when that tweet came out, because I was watching the markets yesterday afternoon, and I said, it looks like Trump wants Powell to keep cutting rates by imposing these tariffs. And you notice that the tariffs haven't been imposed yet. It's from September 1st, so he can always change his mind. But it wasn't only me who thought that. Even the FT says here, Trump tariffs increase pressure on Fed to cut rates. So there you go. President Trump is really desperate for low interest rates. He's even willing to create a little bit of havoc in the meantime. I'm not sure what his game is. Anyway, we focus here on the precious metals, and that's what we're going to keep doing to protect ourselves, in my opinion. The other thing that happened yesterday, we had some data from the US, and they were quite weak. We had the ISM Manufacturing PMI, that was expected at 52. It came out at 51.2. A number below 50 indicates a contraction, so we're still not below 50, but it dropped. It was lower than expected. And the ISM manufacturing prices also, that was expected at 49.6. It actually dropped to 45.1. That might give the Fed an excuse to cut rates again. They might say, oh, the prices are under control. So we had also construction spending. It was expected up 0.3 and it dropped 1.3%. Some weak numbers. Today, of course, we have the the big numbers, the job data in the U.S., non-farm payroll. You kind of wonder if that number is going to be a good number or if they're going to make it look a little, I mean, they could have non-farm payroll of 100,000. It's expected 160,000. But they could have the unemployment rate stay pretty low. Maybe instead of coming out at 3.7, it comes out at 3.6. And why am I saying they could have this? Well, because I think these numbers are all hypothetical and they're controlled, I think, a lot of times by the administration. I'm not having a go at Trump nor Obama. It's what they do, all of them. It doesn't matter if they're left or right. They use these numbers. Average hourly earnings as well, you need to keep an eye on that. The Fed watches that for signs of inflationary pressure. That's expected at 0.2. So yeah, this is the big number today. I expect more volatility this afternoon or later this morning for the US, afternoon being here in the UK. Numbers out at 8:30 a.m. New York time. So where are we this morning? It's 8:15 a.m. Gold has come back down a little bit. It's at 1434. The high overnight, as I said, was just below 1450. It was 1449. So we're down 10. Silver is down 16 or 1% at 1615. The high overnight was 1638. The Dow futures down another 36 points. We're at 26,546. S&P is down 0.25% or 8 points at 29.45. NASDAQ 100 future is down 28 or 1/3% at 77.71. Sterling continues to weaken. We dropped below 121 yesterday. We did rebound back up above 121. It's now down 0.1% at 121.15. And in terms of the price of gold and sterling, we got up to a high of 1192 last night. So we're about 3 pounds away from the all-time high hit in 2011. Euro is unchanged, 110.86. The dollar is down 1/3% against the yen, 106.95. Dollar strengthened a lot versus the yuan. We're at 6.96. I think we were at 6.90 yesterday when I was doing my video. Crude oil also was hit because of the tariff announcement by President Trump. We're now trading WTI 54 handle. I think we're trading with a 58 handle yesterday. But in spite of that, we're still up 2% from the low yesterday. We're at 54.88. Brent is up 2.5% at 61.67. The bond markets moved massively yesterday. Yields dropped considerably. And I know that because I used to work as a bond broker, futures and options broker. I started out as well as a cash bond broker, U.S. Treasuries, and we dropped over 10 basis points. And we're continuing to drop this morning. The 10-year yield is now at 186. We were above 2% right after the Fed decision on Wednesday. So we've dropped almost 20 basis points in a matter of a couple of days. So the bond market is indicating that they see a recession ahead. There's no other signal here other than that there's a recession ahead. So this morning we were down 3 basis points at 186. The 3-month is at 209. So we're at 23 basis points inverted. That's from around -2 to -5. That's where we've been recently. So that's another big signal that the bond market sees trouble ahead for the economy. The rule of thumb, and I'm not being arrogant because I worked in the bond market, but there's a saying that the bond market is much smarter than the stock market. So that's not good for the economy, and I guess we'll probably see another rate cut now in September by the Fed, September 18th. So there you go. Don't let political parties and divide and rule distract you from what's really happening. What we're getting here is a massive recession, in my opinion. It's not surprising. And I don't think the central banks, the Fed included, have that much ammunition to extricate the economies out of this oncoming recession. And why do I say that? Well, because all the ammunition was used 11 years ago. Well, not save the system, but save Wall Street and the City of London. I think Main Street would have been okay. I recommend you watch some videos by John Tider's Best Evidence is his YouTube channel, where he talks about that the Main Street was fine in 2008, 2009. They didn't need to be bailed out. And the same thing probably goes for the UK. Yeah, of course, if we'd let the whole of Wall Street and the City of London collapse, it would have caused quite a deep recession. But we would have been able to clean house and reset the system, and we'd be much stronger now. But they didn't. They saved they saved Wall Street and the City of London, and they didn't reform anything. The Dodd-Frank, I don't think, has really changed much. The bankers are still at it, and they're still gambling and acting irresponsibly. Derivatives are still a big part of the system. If you enjoyed this video, make sure you hit the like button, subscribe to the channel if you haven't yet. You can also follow me on Twitter, Steemit, and on DTube. I wish you all a great day. Take care. Bye.